Hey, business owners, welcome, welcome, welcome. My name is Lunta Di La Paulo, and I'm a CPA and the managing director of Yeto Accounting and Tax PLLC. I'm here today to talk to all of you about a very important subject. If you are in the type of business that is project driven or job driven, right? So I'm talking with all of my folks who are in the construction space, whether you are, a remodeler, you are a builder, an electrician, installation installer, a roofing company, an HVAC company, you name it. All of you guys, right? Many times when you get your profit and loss statement or balance sheet, you see the consolidated numbers, right? Or rather the aggregated numbers. You see your top line, your gross revenue less cost of revenue. You get the gross profit margin, and then you have less operating expenses. Then you have net operating income. Depending on your legal structure, either the income passes through your personal tax return or your tax as a C corporation, right? Typically, that's really what happens. But here's the problem with that. When you have your numbers, right? When you have your numbers set up that way, you're not really sure. You're not getting the type of insights that most of our clients, if not all of them, are getting at the granular level, right? You don't know which job made you money, which job cost you money, what job are lucrative for you to continue bidding, right? Most business owners we talk to, right, have a general idea around, okay, I make more money on the residential side and not so much on the commercial side. I don't touch an industrial project, things like that. But here's what we actually do for the folks who decide to begin working with us. Right. So we set up the accounting system in the way that produces, right, revenue at the granular level, right? We actually make it a point so that they can have this level of information. Let's forget this for a second. A lot of our clients get their reports this way, right? Which project, right? Project 1 to 10, right? Project 1 to 10, and then the total. And we're looking for the month of November, right? We see the revenue for each one of these projects. And then we have the direct cost, right? Direct cost is composed of labor cost and the material costs, right? Within labor cost, we are allocating the cost for each one of the projects, right? So for some of the guys who are in the remodeling space, right, it includes independent contractors, their project managers, right, including the benefits as well as the owner compensation allocated to that specific project. Outside of the labor cost, we also have material costs, right? Supplies, equipment, materials, all of these good stuff. So we're allocating these costs accordingly to each one of the projects. But now, there are costs that we can't simply allocate to one single project, right? The rent of the facilities, the car that you drive across several projects at the same day, on the same day, for instance, gas, meals. What do you do with that? Those are called overhead. These are indirect costs that we have to allocate proportionally to each one of the projects. So for example, here we have indirect costs, right? For the month of November, it was a total of 55,000. It would be a mistake to get these 55,000 and put it into one job or two jobs or three jobs. But if we are a little bit rational, we can allocate these based on a unit of measurement, which for this case, we actually were able to allocate based on hours dedicated for each one of these projects. So based on the budget of each one of the project allocated, right? So the hours that each person worked in this project, the total of that hour was allocated according to this measurement, which gave us the allocated indirect costs, right? And this was a proportional allocation for each one of these projects. Then the sum of the direct cost plus indirect cost gives us the total project cost. So again, we started with revenue less total project cost. Then we get to the project profit margin. So this is actually one of the most important measurement element unit, okay? Because if you can see what's the profitability of each project, you can actually predict whether or not you're going to be profitable towards the end of the year or not. And then we compare that to the industry average. Where is this 25% coming from? Of course, the industry association called Association of Professional Builders. And we're using an example of a construction company, right? So based on these 25% that is expected that, a typical company performs in the industry, right? We can clearly see that certain projects are above industry average in terms of their profitability margin, and other projects are not so much in line with industry margins. So once we have that, we can actually come to a conclusion, right? The lowest gross profit margin that was produced by a project was 7%. The highest was 33%, and the firm-wide profitability margin was 23%, which is, again, below industry average, right? We also learned that 4 out of 10 of the project we had in the month of November produced a gross profit margin below industry averages. But having the numbers this way sometimes doesn't do us justice. So a cleaner way that we send to our clients is actually a chart that looks like this. And this chart tells us what's the gross profit, what's the revenue. Let me make this slightly smaller so that you can see everything in one go. Okay? So project 1 to project 10, we can see that project number 3 had the highest revenue, but it wasn't necessarily the highest profit margin, for instance, right? We're seeing a lot of labor cost. We're also seeing a lot of material cost. And we're also seeing slightly higher allocation of indirect costs. The second highest project in terms of revenue was project 6, right? We can see here 98,000, right? And it actually had a better, right, gross profit margin. And again, the highest profit margin actually came from project number 8, and the lowest, right, gross profit margin was actually project number 10. Okay, so these kind of information and insight, Kraftco representation, allows us to know where we stand and how we can make good decisions to move forward. And I hope this was very helpful to you. And if you need our help, we're here to support you and your firm. My name is Lunta Di La Paulo again. I am the managing director and I'm a CPA in Yetu Accounting and Tax PLLC. Feel free to reach us out. Would love to support you and your team and set up a system like this that can help you make good business decisions. And by the way, we're starting to enter into the tax season soon. So if you haven't found a professional you can rely on to get your taxes done or simply prepare you for the end of the year, would love to be your partner in that way. Have a great rest of your day and we'll see you soon. Cheers.